What's up, everybody, and happy Halloween. We're going to be getting back into this thing just in time for another exciting edition of the Federal Reserve. So it's been a little while since I saw you guys last, but things have definitely been progressing. So got a lot of really exciting stuff to show you. Figure today we're going to start off on the S&P 500. This is the SPX, so 500 biggest stocks in the American economy. Might as well jump right in. So we got a couple things in the graph here, color coded. We got a green meaning good, a red meaning bad, and an orange that is halfway in between. So since the last time I talked to you guys, I found a couple different things I want to talk to you about. First of all being the channels and the reversals. So last time we were talking about ABC patterns and Elliott wave theory. This time we're going to be going a little bit above and beyond that, where in the past we were looking to see, is something going to go up, is it something going to go down. So here we're going to add a couple more layers into the fray. So instead of just looking for something to go up or down, we're looking for something to do a continuation or a reversal. So as you can see on the screen here, we have these red lines. So we have these red lines going from top left to bottom right. So what that means was there's a channel established back around August, end of August on this graph. And as you can see, things have been sliding downwards ever since. But they don't just go up and down in a straight line. It establishes a channel, it chooses the slope, and it bounces around within that channel, has some highs, has some lows. It might even jump into an adjacent channel from time to time, as you can see in this activity here, right around middle to mid-October. And then as it tries to choose a reversal, what it'll do is it will break out a resistance. As you can see, it did right in this zone Friday, 14th of October. But once it breaks through that resistance, it encounters another channel wall right here. So you can see in this zone, it's deciding, does it want to continue to break out, or will it react along this line? In this particular time, it kept on moving up in the world, so it jumped another channel width across, and then finally, after it was able to breach this line here, I consider it to be a breakout. So we're now going in this green zone here, and we're at a decision point that brings us to today, the 1st of November, and tomorrow we're going to be looking at the Federal Open Market Committee meeting. Once that happens, we're in this little decision area here. Are we going to get good news from well, good and bad news is all subjective. Are we going to get news that the market likes tomorrow, or are we going to get news that the market does not like? So once it chooses a path, and I've got two different places where we can go. If the Fed comes out dovish, we could look at going all the way up to this blue sloping line of resistance here, and that's going to take us up to about 4,200. It just kept on projecting out the same slope to meet up with that blue line. That's how I got to the 4,200. Or what I did was I took these dotted lines and I just chose the polar opposite and pushed it downwards instead in the same time frame. So we are looking at about 2.5 weeks. The short-term bearish target could just be the equal and opposite of this bullish one, so we could be looking at dropping down to 35.50. So if we got down to 35.50, let's just put a horizontal line there. So this orange horizontal line, that could put us near the lows that we were experiencing back here in October. So that could be the target, but it could continue down in that downward trajectory, could take out the low, and down lower and lower we go. So that's what we're looking at in this this pattern. So the one other thing that I failed to mention before was this curvature here. So when you're not in a continuation pattern, you're in looking for a reversal. So that's when you have this set of curves here. Same principle as the straight line channels coming down across the graph, but in this one, it's touching many points in a curved line. It might be heading in the downwards direction, but it's decelerating that curvature. So that could be a point where you're looking for something to reverse. So that was this established with this first curve here. As you can see, it broke through this curve, just like it was having some breakthroughs on these red straight lines. It came down here to the next family of curves and established that point here, put the family of curves there, and that's how it just swept right through into this upward channel. So this price action, it does have a lot of opportunities to choose if you want to take the high road or the low road. So those are based on fundamental things that are happening, and Federal Reserve open market committees, see if they're going to do the 75 basis points or if they're going to reduce to 50. Mostly it's going to be looking into the future. So that's when we have this decision area right here. This orange triangle is a little bit of a leftover from the previous 6 months or a year. That's been a pattern that's been holding true, that I pulled from different historical type of downturns, and see how it plays out similarly. So if this one is going to follow along with a pattern that I lifted off of the 2008 scale, then this would be around the time where it's going to be kind of a last gasp type of a thing. So we're going to look at a little bit of a rally here, but then this is in the 2008 time frame when we did have the largest and sharpest downturn. So that is a little bit alarming, but it doesn't happen every time. If you look at many different recessions all throughout the past, 2008, what we had back in the 70s, and dating all the way back to 1929, the Great Financial Crash of 2008 is the one that really followed this mold, where it had an accelerating climax of a crash at the end. So that's what we're watching out for right now. May or may not happen, but it is, as you can see in live time, it's reacting off of these orange triangles, and we'll see if it wants to play out the same way as it did back in that time frame. So I'm going to pause it here and take a break, see how we're doing on time, and we'll be coming back for a bunch of other charts and be taking requests. So catch you on the flip side, and comment what you want to see, and we will check it on the later.